Welcome back. In 2020, the U.S. economy shrank by 3.5%, leaving millions of Americans without jobs. But as COVID-19 vaccination efforts increase and businesses open their doors again, Federal Reserve Chairman Jerome Powell says the economy appears to be showing some promising growth and could see the fastest year in growth since the 1980s. We're joined now by Gary Gygi with Gygi Capital Management live via Zoom this morning. So Gary, the big question is just how much of that growth can we see here in the Beehive State?
John, it looks like it could be a really big year in terms of GDP. So national GDP is expected to be anywhere from 6 to 10%, which is huge. And so a lot of that's going to come out of people's savings, because people's savings have increased approximately $3 trillion over the last year and a half or so. So there's a lot of money sitting there waiting to be spent. And as soon as the economy starts to open up and people are able to do what they would normally like to do, go to restaurants, travel, go to hotels, bars, whatever hospitality and leisure stuff they want to do, they're going to be able to do. So that bodes well for the state of Utah as well, in that the economy of Utah typically does a little bit better than national economies. So I don't know exactly what Utah is going to expect, but if national economy is somewhere between 6 and 10%, I got to think Utah's economy is also somewhere between 6 and 10% as well.
Now, with so much government spending the past few months, is inflation a concern these days?
Yes, it's a big inflation for anyone that's following the markets. It has to be. And so when the economy opens up and people are buying things and they're in demand for various products, and if the manufacturers cannot keep up with that demand, absolutely there's going to be more money chasing fewer products, and inflation is going to be a problem. It is already a problem in certain areas. If you follow lumber, you know that the price of lumber just skyrocketed, and various commodities, oil has gone up, which means gas has gone up that you pay for your car. So there are various commodities have already moved up, and inflation is potentially a problem. Right now, the Fed says they're on hold until 2023. They can change their minds if inflation starts to get out of control. But for right now, absolutely, that's my number one concern, inflation.
And let's talk interest rates before we go. They're at record lows right now, allowing many families to buy homes. It's causing a big boom in our housing market here in Utah. Do you expect the interest rates to rise here in the near coming future?
Well, John, they already have started to rise a little bit. The yield on the 10-year has risen, 100 basis points since last fall. And so mortgage rates have also ticked up a little bit as well. And so if rates continue to rise, then the Fed may employ what's called Operation Twist, which means they buy bonds in the long end and they sell them in the short end, which is an attempt to keep interest rates stable. So whether they're going to be successful or not, I don't know. But I know there'll be an attempt to keep interest rates stable if they keep creeping up like it looks like they will.
Gary Gygi with Gygi Capital Management, thank you so much for joining us here on this Money Monday. Thanks again.
Thanks, John.